Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 1.5% there. On the S&P Nasdaq, 2%. Semiconductor got hit close to 3% negative. Dow held a little better, but red nonetheless. Looks like Russell 2000, transport, banks, energy, biotech, healthcare, home goods, utilities, retail, emerging market, every single sectors are pretty much bloody red today. Bitcoin down, gold, silver, miners down. Notably, GDX, the miners down close to 5%, dollar slightly up, oil up, treasury bond down, VIX popped. Let's stick with S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed, right here, closed yesterday. And this is where we opened up today, this morning. So we actually saw a nice size, a gap up this morning. And it looks like with the FOMC meeting today and possible rate hike going into next month, people are freaking out completely in panic and fear. That's the second hour, third hour, fourth hour, fifth hour, sixth hour. There's no support. Everything is going down. This gap that was opened up this morning just went right through. Short-term and micro-term moving average, invisible. My mid-term moving average wasn't even there. This thing just straight tanked all day long. We want to understand the overall stance of this market, and that's what I'm going to present to you in this tonight's analysis. So let's understand the bigger picture of things. Obviously, in the short to micro term, we're back below both of those moving averages, right? My short term and micro term moving average right there, we just blew right through it. So that sentiment is back to bearish. But I want to talk about the midterm because midterm is very, very important. We've been tracking this midterm moving average in the last 3 months or so. So you can see that midterm moving average has been declining, throughout February and March. But sometime in April, it looks to be slightly rising, slightly. However, the price has been trading all around that. It's kind of messy here. We're not truly respecting that midterm moving average. As you can see here, we just kind of been, flirting with it a little bit, going in and out. So I think the midterm is safe to, we can't say as of today, the midterm sentiment is bullish looking in the 65-minute chart. I think it would have been more bullish if we would have seen that continuation, but with that tankage today, that sentiment is gonna be neutral, not bearish yet. Remember, the trajectory of that midterm moving average is gonna determine the sentiment of the midterm. When I say midterm, I mean this right here, going all the way, pretty much this entire year, right? Enthusiastic buyers, they're looking for that inverted head and shoulder formation, possibly for that to play out. So what the bulls need to do is to cultivate that higher low, that right shoulder, right? But the right shoulder to be formed, you just have to make sure that this price does not come all the way down to the lows, you see, because what's the definition of an uptrend? Higher lows and higher highs. You can see that this is equal highs, so we don't have a higher high yet, but that's the low in March. Can we say this could potentially be that higher low if we bounce from here, if we bounce from here, or anywhere somewhere in that? It just cannot come down to the lows, right? Anywhere in this vicinity, this band of support that I've given you, 436 and 429, is gonna be anywhere in this vicinity. Give some wiggle room. If the market can bounce anywhere in that vicinity, it's still gonna be counted as higher low, potentially a right shoulder. So looking at this in the midterm, we're not in a downtrend, we're not in an uptrend, we're trendless environment. Yes, because there's no lower highs. There's no lower highs and lower lows. There's no higher lows, higher highs. We've been moving sideways. So despite the fact that we did see the very severe tankage from this market and all the bulls are crying, whining, and moaning, we have to understand the big picture of things. We're still in this trendless environment, right? So And the midterm moving average is currently, currently moving upwards slightly, but because of that, price action is trading all around it, I'd have to say it's a neutral zone right now for that moving average. That moving average is probably waiting what the price is gonna do. Either it's gonna come right back down or it's gonna go right back up. So this is important level. If you want to see how this market set the tone for the summer coming up here, May, June, July, it's very, very important how this market plays out in this vicinity. Let's check out that oscillator, see if we can extract any more information. So the dream that bulls had, right? That bullish divergence dream that bulls been working with, bulls been dreaming about, bulls been eyeing on for the last several weeks. Well, that dream has been died. However, we got just a little bit of hope here, because on this oscillator, we're still in that vicinity at a potential level of support. So if you're a desperate need for this market to bounce very, very quickly here, you want to see this oscillator finding support here. If you don't, if you see bears bring it down, we get below it, especially if bears bring it all the way down to the bottom of its band, things will get very, very hectic. I won't be surprised to see a sub 430, maybe even 425. So bulls, whatever happens in the next couple days, several days, any more bloodbath may be coming into the market. You make sure you do not let the bulls fill this gap. If you can protect this gap, you can still make that inverted head and shoulder play out, just like how the bears kept this little gap, remained open. They protect even today on that big gap up. Bears made sure that down gap wasn't filled. What happened? The tankage came. So when the bears are getting really, really rowdy at this point, bears start coming down, you make sure you protect this up gap that was opened up on March 15. If you can do that, you could possibly survive this and come back for you. We'll reassess the situation. Enjoy your evening and good luck trading tomorrow.